What have we learned from the first 6 months of the year? 6 months ago, we were worried about political risk, the depth of global growth, and the size of volatility. But are investors now more relaxed about it? And what metrics are they using? What indicators are they using to measure risk these days? Well, with me to discuss this is Valentijn van Nieuwenhuijzen from the Dutch investment group NN Investment Partners. First of all, Valentijn, there has been a marked reappraisal from the market about what we might call risk on, risk off.
Yeah, well, I think what is not completely surprising, especially on the political side. You know, a lot of the fear factors have proved to be less impressive in terms of its impact on the real economy and its impact on markets. Part of that we learned already last year with the Trump election, with Brexit, but especially in Europe this year. It's quite impressive how easily these risks of populism, Dutch elections, French elections have faded to the background, and we're now all of a sudden talking about a reform opportunity in France.
Let's run through some of the charts, because your charts at the end are quite interesting, but the first one, economic data, is no longer surprising in the way that it used to.
No, I think that is of influence in the themes that you see in markets. The reflation theme is a bit under pressure, search for yield theme coming back a little bit, and it has to do, I think, with data still being strong, but no longer surprising to the upside. Certainly not in the US, where they're a bit weak.
Second chart is about volatility. I mean, for some reason, some investors worry about low vol. Are you worried about low vol?
Yeah, well, I think we're still living in an age where investors worry whatever happens.
Okay.
You know, if volatility is high, they're worried about high volatility. If volatility is low, all of a sudden the markets are complacent. Quarterly changes in growth are very low, and I also think that actually below the surface there's still a lot of action going on in markets.
Yes, well, one place where there definitely is less worry than there used to be is Europe. This is a remarkable turnaround, isn't it?
Well, I think indeed, and this was even sort of already clearly happening before we got the French election results. I mean, this is, for example, the German IFO just recently again reaching a new record high, and you see now that it's really broadening. I mean, Europe has now created 6 million jobs since the depth of the euro crisis, and more than 4 million of those jobs are being created outside of Germany.
Right.
And we're seeing now that it's really also another cyclical indicators is more broad-based in Europe, that we're seeing quite an impressive recovery.
Now these are the charts I want to really focus on. You are really interested in big data, you know, to understand, you know, how to measure further risk. Tell us about what this is.
Well, I think, you know, first and foremost, it comes from the strong conviction that we think the markets are an organism of their own, which has a lot of behavioral elements driving them forward. So we try to capture this behavior and sentiment by looking at social media sources, listening what is being said about global equities, for example, through these sources, and then see whether that gives us a positive or negative emotion related to equities.
The higher the what? What does that mean?
The higher, the more constructive the emotion is on talking about global equities.
Right.
So this is telling us really that, you know, although at the beginning of the year, we after Trump actually moved up quite a lot, or right through Trump, stabilized a bit, and more recently, the last 2 months, you see that in social media at least, people are getting more and more enthusiastic about equities again.
And the second one, which is about political sentiment,
yeah.
This is measuring what people like us write about, is it? And,
it's measuring, you know, two channels that we monitor. So one thing is again the social media channel, and then the more professional channel,
right,
through the financial news media.
That's
so
the bottom one of these.
The platforms, yes, the platforms, the wires, you know, that the news media uses to express their opinion. And also there we listen to what is being taught there, and to what extent it gives a positive or negative connotation in relationship with equities.
What's that telling you therefore?
A bit of a stable sense, although we recovered a little bit on the back of the weakness after Trump. But again, you're seeing that the fears over political instability on the social platforms are actually fading. So the sentiment is improving there. What we're generally seeing is that across the range, there is no longer a deterioration compared to what we saw last year.
So just finally, Valentijn, you're looking at a second half of the year in a much more relaxed frame of mind, are you?
Well, I certainly have still a relaxed frame of mind. I do think that the global economy is still quite strong, best state it has been in for the last 10 years, I think. We will need to see maybe a bit improvement in the data surprises, but at the same time the political risk has really faded, and I don't expect them to really change the direction of markets in the second half.
Valentijn van Nieuwenhuijzen, thank you very much indeed.
Thank you.